Hello everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal, the founder of EXP Invest. Today, we are here to talk about Nifty, Bank Nifty, other sectoral indices, the intersector analysis, and answer some of your stock analysis requests, which I have received on my website. I just want to take 1 minute to tell you about it. EXP Invest is the company that I founded in the year 2002 to provide retail traders like yourself services in the equity segment, long only side. So if you want to do swing trading or long-term investments in the equity segment, then EXP Invest is your one-stop destination. Or if you have an equity portfolio that you need assessed, or you want a one-on-one consultation with an expert who can guide you with respect to the best path forward for you or career counseling in the equity investment industry, then you can just visit my website, explore the services, and avail whatever it is. So, with that, let's move on with the 3 minute time frame of Nifty and work our way upwards. So, now you're able to see my screen, and what you're seeing is the 3 minute time frame of Nifty. Now, on this 3 minute time frame of Nifty, what is very evident is that the Nifty is currently in a very strong bull, right? In fact, even within this strong bull range, this tiny little bit of correction that we've seen in the second half of today being Friday closing. Just yesterday, the Nifty contract expired for September, right? So this is the beginning of new contract, and what I am seeing is that a very subtle correction has been seen, which is very unusual. I'll tell you why. Because it's Friday, because the contract is expired, typically the reaction is more extreme, but the underlying momentum, as I've been telling you since this entire rally began, the underlying momentum is incredibly strong. I'll be honest, my personal target in the market was 26,000 actually, which has been achieved, and we've even touched 26,250. But this momentum is just not stopping. It's just there's no sign of stopping whatsoever. Even if you look at the 15-minute time frame here, there was a small negative divergence here, and I was expecting that maybe we would see a small correction, but we really didn't. We only saw like a 24% pullback from the very peak, which is nothing, which is like the shallowest of the shallow corrections. And the rally has since been continuing. Of course, the 50 basis point cut was like fuel to the fire, and we can see the RSI here has only forged a higher high, which means the momentum has actually picked up pace. So the upside is definitely expected to continue in the market based on the technical observations. Also, if you look at the volumes on the 75-minute time frame now, the volume upside is also very evident. The price continues to rise higher and the volume continues to kick even higher. So this means that the price is getting a lot of support from the volume, which is a very good sign. Now coming to the daily time frame, on the daily time frame also, if you see, this is where the correction in the market actually ended. The whole volatility that we saw on the 4th of June, that was like the market letting off steam. And since then, a fresh leg of rally has begun, which I have been telling you since the day of the result that this is the correction that you were speculating about, and this is it, this is the time, it's you got to be in the market. And just today I spoke to a prospect, and I've been hearing rumors there's going to be correction in the market. Nobody knows. Okay. These are just speculations at best. You need to be objective. You need to look at your data and you need to make decisions driven by data, not by speculations. So if you're going to sit out of the market, see, you were sitting out of the market when the market was around the level of 23,000 because you thought that'd be a correction to 3,000 point correction. That correction technically did come. The market did go to 21,000, but did you really enter the market? No, you did not, because that correction was just too sharp. Does not matter. Irrespective, the correction did happen. Here again, the market rallied 17%, it declined 5%. Did you enter the market? If you're waiting on the sidelines, trust me, you're going to miss out the rest of the rally. There's a lot of rally coming in the market. Get into the market, invest your money, and manage your risk, allocate your capital properly. So the underlying trend in Nifty at least remains really strong. With that, now let's move on to other sectoral indices, and we'll start with the Bank Nifty. Let's get started with the 3 minute time frame of Bank Nifty, and I can see that Bank Nifty also has delivered massive an awesome returns. We had the support of 49,000 in our mind roughly. So that is roughly where we saw the turnaround in Bank Nifty. A positive divergence, or you can also say a double bottom, is what indicated that this correction was over back on 14th of August. Since then, we've seen higher high established 20 DEMA, which is this blue line. So this is the 20 EMA of the day time frame superimposed on the 15-minute time frame. Superimposing EMAs, the purpose, the advantages, all of this is taught by me in my advanced swing trade training program. More information about that in my Telegram channel. So I'll be posting the link of my Telegram channel if you want to join me or my services or just connect with me. You're more than welcome to join that. It's called Trade with Kavita, right? So here 51,000 was an important support. We can see Bank Nifty has bounced up from that. Right now, Bank Nifty is forging lifetime high. What about the forward looking analysis? There was a tiny little negative divergence, and we can see some pull happening there, but the underlying momentum in Bank Nifty also continues to be very strong. The private sector banks have given a pretty good rally. Moving on to the public sector banks, let's look at the public sector banks first before we look at auto, because I have a lot to say about auto. The public sector bank, on the other hand, in my opinion, is not as promising as the private sector bank. Primary reason being the trend, the momentum, the RSI all look pretty weak. So if you see here, there was a breach in the level of 30, but I do notice a small little positive divergence there, and even probably a range shift, but I wouldn't be very confident of this until and unless I see the of the CNX PSU Bank Index cross above the level of, say, over here, or at least touch the level of 70. Until then, I wouldn't really believe that it is ready to establish a new trend. Why? Because last time also, if you see, it did establish a positive divergence on the 75-minute time frame, but that just fizzled out with a very small upside. Banks, I think they could come back in favor, but you have to be a little bit patient there. Don't rush into purchasing those stocks just yet. So, where is the momentum hot right now where you should be focusing? So, in my last Market Outlook series, I told you about the auto sector. And if you look at stocks like Bajaj Auto, Force Motors today has gone up 8%. If you look at Maruti, fabulous rally has unfolded. One amazing stock where the rally has not unfolded yet and is a great auto stock is Tata Motors. So keep your eyes out on Tata Motors. In fact, technically, just today I was seeing some very good confirmations there. So you definitely want to check out Tata Motors. CNX Auto, what I can see is it has given a little bit of a correction, and what this that you're seeing is the beginning of a fresh new rally. And I strongly believe that this rally is here to stay, is here to continue. Look at this massive super trender. It's been in a strong uptrend since forever, and it just continues to give. And I expect the rally to definitely continue. Fresh positions are not recommended anymore, except for maybe in Tata Motors. But again, you have to wait for some pullback there also. Most of the bank auto stocks have honestly given a massive run up. So if you want to make fresh entries, I would suggest you wait. If you are currently holding auto stocks, then trail your stop losses. Commodities, consumption. So consumption also I can see very strong rally, but honestly I'm finding it difficult to find entry points in the consumption sector. So I am going to move on. Energy sector, stock specific commentary if I have to give you. I am not feeling very confident about it. Primary reason being that the energy sector is done with the meteor part of the rally, and this rally that we are seeing, even though it is still upside, it is full of a lot of kicks and starts. I don't like that. It makes swing trading very difficult and increases the probability of. So for now, I have actually exited my energy stocks, or I am trailing them very closely. Also on the daily, if you see, there is a pretty big negative divergence on the energy sector, and the daily RSI is resisting the level of 6 like a plague. So I don't like that. I think there are better sectors to do. Finance sector surprisingly has been in a very good rally, and I think the momentum has turned up. However, for fresh entries, I would suggest you to wait for a dip. I think the finance sector is a good momentum mover, which means that it rallies and dips and rallies and dips. So entering on dip is a better strategy than outright purchasing on at the end of a FMCG. There is a massive negative divergence building up on the 75 and the daily time frame. which makes sense because the broader market is continuing to build a very strong momentum. Attention is turning away from defensive sectors like FMCG, which might be the reason why the momentum is slowing down here. I have been avoiding FMCG stocks and I will continue to avoid FMCG stocks. Primary reason, nothing against FMCG except for now the negative divergence developing, but primary reason being I think other sectors are way more promising right now. Infra, in my opinion, ever since March 24, I think the rally in infra has been there, but again, lots of jumps and starts. Not very comfortable with that. I prefer a healthy rally with less deeper corrections than the one that we are seeing on infra, right? So, infra is again one of the sectors that I am being very cautious around. Sector has taken a healthy correction and is starting to now come back into favor. The 20 DEMA here is going to get retested soon, and I think the IT sector can give really attractive opportunities in the weeks to come. It has been in, I would say, a little bit of a rest period since the beginning of the September month or end of the August month. But I think in the coming October, November, and December, in the next quarter, basically, IT sector is something that you should definitely look out for. Media sector, again, not a very healthy rally. Metal sector, we spoke about the metal sector last week. Let me take out the notes. Let's see, where is the notes from last week? There it is. Yeah, no, this is the notes that we prepared in the last market outlook series. So we talked about the metal, auto sector, metal, IT, and energy. So I'm going to chuck energy out of here. Not so bullish. I'm going to move it there. Reality, we've not discussed. Bullish, I think I'm going to put infra down here. Very bullish, I think, is auto, metal, and I continue to be there. This is the metals sector, right? So, yeah, the metal sector we discussed last time also, super bullish. Sale bhel. Everything is starting to move up, and I think that rally is just beginning because you see here, this is where the rally actually began, and this is where it corrected. So, this, my friends, has seen a 50% exact Fibonacci correction and is ready to rally again. So, now when it begins the rally, I would expect not just this high to get breached, which already is getting tested, but I would expect a whole new trajectory to get set here. So I would expect this rally, which has been respecting this per trend line, to continue to respect. So if you see here the trajectory that I'm forging for this most recent uptrend on the charts, I'm going to remove the other trend lines to declutter my chart. You can see the sector has corrected all the way to the bottommost trajectory and is starting to head higher. So I would expect at least another 6-7% rally in the metal sector, which to stocks can convert at least 3x, right? So even on the daily time frame, if you see very strong RSI positive range here, which means that the underlying trend continues to remain very bullish. And we've just crossed above the level of 60. Last time, if you see, just after the level of 60 was crossed on the RSI and just as the new high was forged, after that, the index itself continued to rally up 20%. If you project even the same, if not more, just the same, of that 20% takes it back to this uppermost trend line, which is massive. So this rally, my friends, is something that you should not miss. Pharma sector continues to remain super bullish. It's insane that the 20 MA or the 20 DEMA has acted as beautiful support here. I would in fact go ahead and in my list, I am going to move pharma back up because the downside that I was expecting has already gone behind and the pharma sector has resumed a sharp rally again, and I expect very strong rally to continue here. Pharma is back in favor. PSE, the PSE sector, I am noticing this is new. I'm noticing a positive divergence on the 75-minute time frame, which means that the woes of the PSE sector might be close to finishing. So I know a lot of people have gotten stuck in a lot of PSE stocks and are experiencing a lot of pains because they bought stocks at like really high prices, and since they purchased the A lot of PSE stocks have fallen like sand, and that is painful. See, the theme of the PSE stocks is very clear. It remains super bullish from a long term perspective, but if you've purchased it in the last 2 3 months for short term, then you are suffering, and I totally feel your pain. Now, the thing is that I think the PSE sector is definitely coming back into favor, but for that to play out across all stocks is going to take time. So you have to be patient and you still have to exercise strong risk management. So I am also holding on to one specific PSE stock. In fact, it is one of the biggest losers in my and my clients' portfolios, and my clients are panicking about that. But it has not triggered my stop loss level despite a big loss, because I have the strategy to hold on to it for a slightly longer term than I usually do. That is what I explain my clients, and thankfully they trust me enough to believe to calm down after that conversation. So my belief is that in the sector we might see the rally return in the coming quarter, and if I have to mark the Fibonacci retracement for this, I think I will take this low and draw this. Now we can see a 38% correction has taken place, which by the way is a very shallow correction. And even though you are seeing a correction of around like 30% on your PSE stocks, remember the PSE index itself has fallen only 10%. So compared to the index, if you convert to the stocks, usually I apply a multiplier of 3, right? So 10% decline in the index and 30-40% decline in the stocks. So quite aligns there. But I would be looking out at the PSE sector also for potential opportunities. So potential opportunities where I would put the PSE sector. So I'm gonna make these bold as well. So I don't think pharma is downside. This is not really expecting downside, but not outright bullish, or not my interest at least. Let's move on to the next sector, which is the realty sector. I'm sure a lot of you have been waiting for the analysis of this one. Now, here we've been noting this nasty negative divergence in the daily time frame, but don't forget that the underlying momentum in the realty sector has been super strong. So what has happened here, as a matter of fact, is that sure, this rally has corrected. It has corrected, I would say, nearly 50% here, but that correction has only brought it down to the level of 40, which actually happens to be the support range of a bull trend. And here again, we can see the index is already above the level of 60 and has also forged a higher high. So I think even the realty sector is heading towards a rally, which is what I told you last time also. And if you look at stocks like Soba, they have given a very good rally. But remember, you should focus on not entering stocks after the rally. If you've missed the first leg of the rally, don't beat yourself up and don't make impulsive decisions. Wait for a pullback, then enter the stock, and then enjoy your returns. Moving on. So we are done with the indices and sectoral indices. What I do want to show you now is how the indices have performed compared to each other since the last week. So this is the 75-minute time frame, and this is the intersector chart. So let's take a look at this intersector chart here. And what you can see is that, so you're looking at the comparison of how the stocks have moved, and this dent basically. So this dent on the 19th of September. Since then, so if I want to make that 0, I think I'm gonna have to make this a little bit smaller, because what I am basically trying to do is give better visibility to our members who are looking at this on a vertical frame. So for them, I'm gonna have to squeeze this chart absolutely in. There you go. Like I was saying, I want to study this from the 19th of September because that is where I saw a major dent. Since then, the metal sector has given fabulous rally, and I think the metal sector is going to continue to lead the market for a while. The PSE sector is starting to catch up, so you can expect the PSE, the reality sector, to again come back to the winners. So there's going to be tough competition, I believe, between the metal sector, the PSE, the auto, the realty. So these are going to be the major winners. Secondary, I think pharma and healthcare are going to follow. Infra will be close behind. I cannot really tell about energy consumption or services. Consumer durable, also not much opinion there. Not very enthused about Bank Nifty continuing to give the rally or the private sector. IT sector, I think, is definitely going to emerge as the underdog in the next quarter. So you want to keep an eye out for those. And like I was saying, my Telegram channel, best way to connect with me. So this is the channel Trade with Kavita. This is the image that you want to look out for. If you go on Telegram and if you search Trade with Kavita, my channel is going to show up. But remember, there are other fake channels running with my name and my image. You don't want to connect with them. You want to connect with the correct channel, around 7,600 followers. You'll see a lot of my face. You'll see my analyst comments. You'll see my stock analysis requests. Now let's come to the segment where I answer your stock analysis requests. So if you want me to look at your stocks, please go to my website. I'm sharing the link in the comments. You need to go fill the form, process it, and then I can answer your queries through a video analysis. So for today's session, we have some requests. Let's head towards those requests. So we have two stock analysis requests for today. One is from Rishabh Hinjar, and his request is in the stock YES Bank. So let's take a look at YES Bank quickly. So Rishabh's cost price is 27 rupees. So we're going to draw a horizontal line and we're going to mark 27 on that to get proper visibility. So you bought it pretty close to the resistance. So I am seeing is that yes, bank is on the upward trajectory. That's for sure. That's what my trend line here is also indicating. I'm going to delete these ones because these ones are no longer relevant because the trajectory of the trend has now changed. So we'll stay relevant with that. Now, what I can see is that yes, bank is on the upward trajectory, but you seem to have bought on the wrong side of the trend. So you bought at 27. So you've likely seen this rally, gotten biased or let it affect your objective thinking, and then on the way down you thought you're buying the dip but you actually bought into the correction. Now what is interesting is that this entire rally, which is by the way 100% rally in just like 3 months, has been corrected 61%. So this is the major correction. Now if you notice, the RSI continues to remain in the bull range, in the sense that the RSI is not breaking below the level of 40, which is good, which is very good. But now I want to draw your attention to the personality of the stock. This stock has a tendency. So here also, if you see the stock gave a massive rally of 100%, pulled back 61%, cruised for some time, came back to almost retest the same level, and then moved up. So since you have bought at 27 here, which is very equivalent to buying it around 22. So suppose you had purchased at the level of 22 back in January 2000, you would get the opportunity to book around 51% profits, but it would take you more than a year, which I think is pretty good returns. So for Yes Bank, let's again look at your comment. Exit strategy, holding. So you've been holding since 6 months. Acha, you can only hold for another 1-2 months. Minimize loss if up move is possible. What is the target? Should you buy more for the next one? If that's all you can hold, then no, don't buy any more of this. What is the best price? See, 1 or 2 months is not going to give you break even whatsoever. But yes, in the next 1 or 2 months, I do expect some upside here. I would expect the level of 25 rupees to get tested in the next 1-2 months, because if you look at the shorter term time frame, on the 75-minute time frame, what I notice is every time the level of 30 gets tested and a positive divergence emerges, the stock goes back into bull range until a bear range or a bearish negative divergence is forged. So last time this happened, the stock rallied, touched your break even point there, 22% rally, right? And exactly from a break even point, it came back down. Now the thing is that again, it's testing around the same levels and it seems like it has started to forge a positive divergence again. Good chance that it might move back into the bull range, giving you an opportunity again for a rally. Now, whether this rally is going to cross above this resistance of 25 and make it to your break-even level, which is 18% away from the current price, that is something that's very difficult to tell. But yes, in the next 1 or 2 months, I think you will definitely be able to reduce your loss here, subject to obviously market risk. But it seems highly likely and very probable, because I think major chunk of the correction here is over and upside can be expected, considering that the stock is definitely not forged any higher high, but it has also not forged a lower low. So as long as this level remains unbroken, you are in good hands. I would suggest you, since your holding period is very small, to also use a stop loss here. And in my opinion, a fair stop loss for you would be somewhere around this low. Why? Because if this low gets breached, it means this RSI positive divergence has well been violated. In fact, if you want to hold a tighter stop loss, you might do that around here. Basically, if this low gets breached, you want to get out. So 22.3 is where your stop loss, in my opinion, should lie. And for the next 1 2 months, so last time, if you see this little bounce back, how long did it take? It took exactly 1 month. 1 month. So your first target, in my opinion, should be 25. Second should be around 19%. And there is also a chance that the stock can retest the level of, because again, if you look at this rally also, the one that happened after December 22's peak, intermittent higher highs, higher lows did get forged before a deeper correction emerged. So here I would expect the stock to test the level of around 28, 29 rupees. But yeah, so I've given you three targets and one stop loss level. I would suggest you maintain alerts around the level of 25 rupees. When that gets crossed, you revise your stop loss higher. Again, then you set your alert at 27. When that gets crossed, instead of booking your profit, you set your stop loss higher and then you set a target at 29 and then don't change that anymore. So if you need again revised stop losses, you know how to fill up the stock request form. Just do that and I'll give you revised stop loss after the level of 25 has been crossed. Next, let's take a look at IRCON. So IRCON has been requested by Harish and wants to know whether it is recommended for long term if we enter the stock today. I don't think it's a good idea to end right away, and I will tell you why exactly. Let me just clean this up a little bit. So this is the 75-minute time frame, and on the 75-minute time frame, what I can see is this stock has very good tendency of giving indication of its underlying momentum by forming ranges on RSI, momentum ranges on RSI. Right now, I think it's in a bear range. And even on the daily time frame, if you see between the previous RSI peak and this peak, there's been a massive negative divergence, which indicates what? That even though the price continued to head higher, this upside movement was not fueled by fresh buying. It was just the state of inertia. You know how a train, once the engine is stopped, does not stop immediately, it just keeps going for some more time. That's inertia. We've all studied physics here. That's inertia. So, what I think that this was a massive rally, clearly, but this rally is now over. So, if you are looking at buying stocks now for the long term, I think you've missed major chunk of the rally and you are getting in on the wrong side of the trend. So you need to stay away from sectors of yesterday and move towards the sectors of tomorrow. In fact, if long term recommendations is what you are looking for, then I have something for you. So, this is my long term offering where I will assess, analyze, and I will give you long term stock recommendations. These are stocks which are fundamentally very strong, which are technically ready to make fresh entries in. And the best part is that I have been following these stocks for months and some even years. And I only give the call when they're technically absolutely ready to start giving momentum. So I will also give you allocation so that you can build your entire long-term portfolio along with my recommendations. I'll give you allocation advice also. Two of my stocks have already become multi-baggers in less than 1 year. And from within 2 days, because now the introductory price offer is getting over on the investment plan, I will be doubling the price of this offering after 2 days. So if you want to enroll for this, just hop over to my Telegram channel. Let me show you. So what you can do is you can just go into my Telegram channel, and here I have mentioned the information that because the long-term plan is now fully constructed, the introductory pricing, which is 24,000 for 2 years, will be removed and be replaced with the full subscription price, which is 50,000 for 2 years. So if you want to enroll for this, just go into this link, expinvest.in/long-term. I'll be sharing it in the comments so you can easily find this post in my Telegram channel and navigate things. So this is just small tidbit since you asked about the long-term plan. So with that, we come to the end of today's Market Outlook series and today's video. If you like this video, please don't forget to leave a kind comment before you leave and do share it with your friends. The recording with edits of this video to make it neater, to save your time, will be uploaded on my YouTube channel, on my Telegram channel. So stay tuned for that. Subscribe to my YouTube channel if you want to know more about my content and learn technical analysis or swing trading through me. Join my Telegram channel to connect with me and know more about how I can help you as a stock market expert, how I can help you as a retail trader, right? And let's find synergies together. So, with that, I'm done with today's session. I will see you again on Wednesday. And if you want me to assess your stocks and send you video analysis links, then be sure to go ahead and fill the stock request form. Again, the link has been shared in the comment. Don't be lazy. See you again on Wednesday at 5 p.m. Thank you so much for joining in. Namaste.